Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below, both the Patreon and Discord. Okay, so we are done with the intro. And alright guys, so I am recording. Let us take a look at the market. So starting off with the dollar, take a look at this. Dollar had a very nice drop and then having a nice little plunge under this blue zone, which I've been saying is going to be a major zone of demand. And so far it has held true even after this pop down, came down towards the lower end of the monthly bullish fair value gap, and then the FOMC hit, and then the dollar found some strength. So overall it's been performing pretty well, but it's time to see, are we going to make a lower high after taking out these lows here, after breaking this blue zone, and from this lower high will we see continuation down? And if we do, the next major level is going to be this monthly bullish fair value gap at about 98.3, 97.735 will be the next major level. If we do start to stabilize here and we don't have continuation lower, it's going to imply that the daily downtrend line here is the next target. So if that were to happen, the structure would look something like this, where we are likely going to stop where we're at here or have one last push into this bearish fair value gap right here. Okay, and coming into that fair value gap, we may see a slowdown hit and lead towards a lower high and then potentially a higher low. And if a higher low were to form here, or even down here per se, look for the daily downtrend line to be targeted. And in this case, it probably have a really good chance of actually being broken through and finally making that move back to 105, 106. So this is a path that we do not want to ignore, would not be wise. So watch for that to potentially happen. However, we will get our odds, our edge this week. So we'll know what is most likely probably on Monday and Tuesday. So what I'm going to be looking for is if a pivot is going to be made here on the daily, and there's a good shot it will be, how the price action will look over the next couple of days, Monday, Tuesday, Wednesday. And once I get that information, I'll know what's most likely. Are we going to go break down further, or are we going to break up higher? And right now, in my opinion, it's more likely we actually break further down, going back down towards 98, because we did lose these lows. So prior to losing these lows, I was looking for a test towards the daily downtrend line, but because we lost the lows first, it is implying more so that we're going to actually test down here prior to breaking this daily downtrend line. I'm still in the camp that this daily downtrend line will break bullish. However, now it looks like it must tap here first, grabbing liquidity under 100 again and going towards 98 to sub 98, 97-ish, around that area. And then that will lead to an extended move, breaking out, probably pull back down, and then break out further, going back towards 106, 107. Okay, at least that's what I'm seeing for now. Okay, either or, both paths still lead to a breakout to the upside. So I'm more bullish on risk on assets in the short term than I would have been if you asked me a month ago, but I'm still looking for a breakout to the upside for the dollar, even if we're going to make a lower high here and break the lows going back down to 97. All right, next is the US indexes. So let's take a look at the Dow, see how that's looking. So finally we're getting a slowdown, and it came right towards the next major pivot that we had marked here at 35,516. What did we do? Came into it, failed off of it, couple wicks, had a nice bearish engulfing candle, and then Friday we had a nice little buy up on the candle, but still we are respecting this bearish engulfing candle, this structure, and having a nice move like this. Okay, very extended extension here. This is clearly showing us that this is slowing down, and it's more likely that we do see a break back down going towards 34,800 to maybe even 34,500, coming back towards these high pivots here. And then we'll see, are we going to essentially create a bullish structure to pop up higher, or are we going to create a topping structure, a much larger topping structure coming for the rest of the year, where we have a double top structure potentially, Adam and Eve double top structure, something like that leads towards lower lows. Okay, so we're gonna be coming into a major decision time as we go into this consolidation, but right now I am looking for a pullback on the Dow. I will be very surprised if we have upside continuation next week. We may, but it'd be very, very surprising. The probabilities are clearly downside for the Dow for next week. Let's take a quick look at the weekly candle. So weekly chart is not too bad. However, this candle, though not overly bearish in of itself, does not imply massive continuation to the upside. Also doesn't imply too much downside either. But in my opinion, with this candle closing like this, and then the daily closing the way it is, I would expect for this next week's candle to actually have more of a doji look, kind of closing within the body of this candle here, which then would imply for the next week for more downside. Okay, so watch for the Dow to potentially continue to weaken over this week. But if we should break out, because we do want to, though it's not the most probable path, we do want to path it. If it should break up higher, then this very, very small fair value gap and this pivot right here, we'll mark it off, will be the next area we want to watch for right there. And the reason I'm going to keep this a red line is if we do break past this and we have a decisive weekly closure above this, and maybe even a monthly closure, we're going to be seeing a pretty big push to potentially get back towards the all-time high. Okay, so we are in the red zone now. If we're going to be breaking the highs, we're going to be finding out pretty soon. So it's going to be very exciting times in the market, and we'll see how everything reacts. All right, so watch for, in my opinion, weakness at least in the short term for the Dow. But if we do break out and start trading above 35,866, and we have weekly closures above that level, the all-time high is going to be targeted very, very soon. All right, next is the S&P. So let's take a quick look at S&P, see how that is shaping up. So S&P, very, very nice closure on Friday. Still very similar to the Dow. Had a nice bearish doji candle, bearish shooting star candle. So there's still implications for more downside. But unlike the Dow, this one had a much stronger reaction on Friday. So didn't actually overtake this candle here, but it did get bought up quite well. But unlike the Dow also, it didn't reach the clear red zone I have here. It's gotten very close, but it still hasn't actually tapped that. So I can see more upside for the S&P to pretty much tap into that buy side liquidity into this red zone, this red box here, and then start to look for it to fail there. We'll have to take our time, wait for evidence, but we are getting close towards these failure zones. If these zones don't hold as failures, for the Dow as we just looked at, and for the S&P, then we have to start looking at the all-time high as being a serious target to be taken. And if that's the case, that implies that we are essentially over with the correction and we are going into price discovery, and that would mean that a bull market is afoot. Now, we don't have that evidence yet, but we are getting close. And like I said, just with the Dow, if this starts to get overtaken, especially on the weekly, and starts getting decisively traded above this zone on the weekly, we have to start looking for the all-time highs to then be targeted for the S&P, just like we would for the Dow. All right, next is the NASDAQ. So let's take a quick look at the NASDAQ. So the NASDAQ is very interesting. So NASDAQ has made a massive move, again, because tech has exploded for a bunch of reasons, but mainly AI has been just a huge fuel to their fire, and it's just been a beautiful move on the NASDAQ. However, we are getting close to where we would look for a failure zone. So the pretty much NASDAQ's pretty simple. If it can get through this fair value gap right here, let's pop this right here, this fair value gap right here on the weekly, and close above this on the weekly, and pretty much just decisively break through this bearish fair value gap, then we're going to be looking for the NASDAQ to go after its all-time highs as well. As we can see, the NASDAQ came to this fair value gap already, failed off of it, but is being held with this bullish fair value gap currently. But I would have, in my opinion, some reservations about this actually holding in the long term. I do think that there's going to be more liquidity needed to the downside to actually decisively break through this fair value gap, especially if the Dow and S&P are going to slow down. If they're not, then then next week we're going to quickly see this get through. But in my opinion, I see the probabilities leaning more towards downside in the short term. So I would expect that for the NASDAQ as well, just like with the S&P and Dow. And if it does happen, these lows right here and these lows right here will be the first to be targeted to take the sell side liquidity there, and then we'll have to see how price action develops from there. If we get a bullish structure, something like this, coming into the orange zone, if that happens, then I would be looking for more upside, and ultimately I would actually look for these highs to ultimately get taken out as well. But if we take out those lows and then we start building out a grinding structure to the upside, or we start just building out neutral price action, then the probabilities are still going to be on the side of more downside rather than upside. Okay, so it's going to be really important to see how the price action develops as it takes out these lows, if we should come back down there. If we don't come back down there, and this is the least probable path, is that we just continue up and actually take this fair value gap. The all-time highs are just, that's it. I mean, there's really nothing to stop the NASDAQ from taking its all-time highs in this scenario. This is the last line of defense, in my opinion, because if we take this fair value gap, it's well into the middle of this consolidation, and these pivots are not going to hold. It's going to be very, very unlikely for these pivots to hold as any sort of resistance for price. So we, like I said, we are nearing the red zone. Are we in a bull market, or is this a bear market rally? The answers are coming, and I think we're going to see the answers to this maybe next week, but for sure, probably all throughout August, we're going to get our answers. Okay. All right. Next is oil, and let's talk about oil. So if you've been following me for any time, you know, in almost every recap I've done, I've said oil is extremely bullish, and it's also one of the scariest charts in the world, because this chart reflects your cost of living more than any other chart. And because it's bullish means the cost of living goes up. Now, I don't want to be a doomer, and I don't want to take anyone's hope away. I want this to be a warning, and also a sign for you to essentially take steps to protect yourself, right? And the ways you can do that is obviously try and kill your debt off, any debt you may have. Kill as much of it as you can. Stock up on essentials, things that you need, things that you like. Do your best, because you have time, but prices are going up. I'm sure you've seen it, and it will continue to go up because the oil chart, in my opinion, is extremely bullish. And this, just like the dollar, this blue zone is a major zone of price interaction, price activity. It's about 5 years old. We broke through it for the first time in a long time, and we came back to make a higher low, and now we're breaking out of it again. And this is just a bullish market structure. And if we pull further out, so it's a little bit clearer for everyone to see, let's take this off here. So here's the monthly chart. This is exactly what I'm talking about. This is just the beginning. Okay, it's just the beginning. The oil chart is telling us that it's going to go significantly higher. It's going to, at least if it validates this structure, which it looks like it is, you're going to see these highs get taken out, and you're going to see this high up here at 150 a barrel pretty much get taken out. Okay, so when that happens, the price of everything is going to go up. So take the time now to try and put yourself in the best position possible. Obviously, look for potential plays on oil stocks. If you're in the swing trade service, we're long oil and oil ETF, because we're positioning ourselves for this potential play, which looks like it's playing out. And if you're not in oil ETFs, that's okay. Look inside of your life. What do you need? What essentials are going to be affected by this? And most things are. So, save money, pay off debt, and obviously try and stack up on some essentials that you really need if you find yourself in a situation where price is going to get out of control and you won't be able to handle it. Okay, so watch out. Oil is extremely bullish, like I've been saying for a long time. In the short term, what we're going to probably see here is actually price get back towards the high of these high pivots here, and we probably will trade through it and then pull back. We'll probably see something similar to this, and then a pullback, and the pullback is going to be a bullish pullback. So if you're looking for any positions in oil stocks, ETFs, maybe some oil companies, I'd be careful with the companies and more in the ETFs, because the companies are going to have other underlining variables that might not allow them to essentially perform as well with oil price. If, let's just say, they have a lot of debt, they're just not in a good position. So be careful with that. Be very choosy if you're going to do like an oil company like Exxon or something. But if you're going to do an oil ETF like US Oil or something, then just watch for a pullback, and then I would look for potentially a place to where you can hop on in, because oil looks like it's going to perform extremely well. And in the short term, pretty much over the next 2 months, we could see at least these highs here getting taken out, so a move back towards 95, and then eventually as we develop on the weekly and monthly, you want to see this high here and this high here getting taken out, so back back above $100 a barrel, going towards nearing 120. Okay, so watch for oil to continue to develop. I would look for a pullback here, and then look for some signs of a higher low, and then hop on from there if you're looking to trade oil ETFs. All right, next is gold and silver. So gold and silver, gold's been performing pretty well. It's been pretty interesting to watch. It's been respecting generally our idea so far. We'll see if it continues to. With the dollar weakening as much as it did, my original idea was that we would come into this zone here, which we did, and that we would actually see a grinding structure up that would then lead to more downside. However, the dollar weakened out much faster than I expected it to. Lost a level I didn't think it would get to before going up. Right, so I thought it would go up towards about 105, then break down sub 100, but it actually did sub 100 first. That might open the door to not a grinding structure up, but instead we actually had a breakout again, and now this may be a bullish pullback, and we may see continuation higher. This will be determined this week, so I'm going to hold off on my idea of what I'm leaning towards. For now, you can mark me as still being somewhat short-term bearish on gold for now, but my idea will likely change this week, or I will be vindicated and validated, and I will make that very clear. But for now, the probabilities have decreased on my side. They're not as clearly bearish as they were, because the dollar has unfortunately weakened a lot faster than expected. So we'll see how this develops. But other than that, it's been very interesting to watch. I'm still overall bullish on gold. It's just whether I'm bullish short term or not is now now being called into question. I was more bearish, but I'm going to have to start transitioning if I start seeing more evidence. Essentially, if I start seeing a pullback that kind of grinds lower, going back into 1927, I will start to flip my tune short term and look for essentially the highs to be targeted again. Okay, if I don't see that, and I continue to see a move kind of like this, then I'm going to remain bearish. I may even grow more bearish, and then I'll look for a move sub 1890, going back to 1850, and then maybe even 1800. And this is ideally, if you're in the swing trade service, I've been talking about trying to get into gold position. This is ideally where I would love to start. If this doesn't happen, I may have to let it go, but I'm going to be very loose with this. I'm going to watch very closely the dollar. If I see serious dollar weakness, I will still try and hop into gold, but I'm trying to give this enough time to maybe we can get sub 1890 and get back into these fair value gaps, and I would love to start accumulating a gold position here. So just gotta be patient. That's the name of the game. Next is silver. Let's take a quick look at silver. So silver, very interesting. I mean, this is such a big move for silver. I know it doesn't seem like a big move, but the reason why it's big, in my opinion, silver has been underperforming gold for the past year or so. So this was an explosive move up, while gold was fairly lackluster in its rise. So this got to let out a lot of steam. Took out this high pivot here, and this is big, right? We're gonna see, is gold gonna be able to, is silver gonna be able to hold this fair value gap here? If it can't hold this, I actually think it's just likely just gonna break all the way back down and take the lows out again. And that's kind of the scenario I'm looking for gold as well, right? So this was really strong, but we've had a really strong rejection so far from this bearish fair value gap, as we can see. If gold's gonna not get as bullish as I still think it won't be, then I think silver will follow and probably have a more aggressive move down, going back towards 21.3. But again, the dollar's going to run this show, and we're going to have to make sure to keep our eye on it. And if gold shows any signs of waning weakness, it's strengthening, silver will do the same. And one of the ways that we're going to see that is if it holds this consolidation without breaking the lows, then we're going to have a really strong structure to go after the highs here. Okay, and then eventually maybe even make our way towards 26, 27 bucks. So we're gonna have to watch this week. It's gonna be a pretty big week. Really the first 2 weeks of August, but this week particularly is gonna be pretty big on gold and silver. All right, now let's take a quick look at Bitcoin. So let's actually open up the Bitcoin chart and see how it's been developing. And Bitcoin's also been developing as expected so far. I had a couple of times where it was surprising me, where I was like, oh wow, we're actually going to break out. But I have been, if you go back in the recaps, you'll know I've been calling for a big consolidation to start here, and it's pretty much played out so far. It does have a bullish bias so far, right? So we have a bullish bias on this consolidation so far. We'll see if we continue that. I am looking for another move up here and then a failure down further. Okay, something like this. I do want to see kind of a repeat of what we saw here. Okay, drew that horribly, but you get the idea. So I want to see somewhat of repeat like that, and then eventually continuation higher. I'm still aiming for the mid 30s, so I want to see around 34, 36,000, potentially higher, depending on the dollar and then kind of the sentiment in the stock market. If we do start to see some serious strength coming into like the S&P, the Dow, the Nasdaq, and they start to imply, like we went over, taking those highs, the all-time highs, then expect Bitcoin to pretty much say the same thing, right? It's gonna not to take the all-time highs, but to go back towards the low 40s, like maybe 41, 42, maybe 40,000 flat. That's only if we start seeing the Dow, S&P, and the Nasdaq attempting to take their highs. That's when you'll probably get a pretty big impulse into Bitcoin. Whether it could keep that impulse is a different story. Again, you don't want to get overly bullish or overly bearish. We have to kind of just remain as vigilant as we can and stay nimble. Right now, I have a pretty strong bullish bias, not just on Bitcoin, but on most cryptos, namely also MATIC. So if you're a free member in the Discord, I recently opened a free trade on MATIC for everyone. So relatively break even, slightly in the red right now. I am looking for more downside on MATIC. I know, funny. I bought thinking it was going to go lower. I like to do that. Sue me. But I do like that. The reason why is I like to accumulate structures. So I am looking for something to play out kind of like this, where we kind of do something like this. That's what I want to see. And that's what I think is going to happen. That's the most probable path that I'm seeing as of now, because I see Bitcoin continuing its consolidation. So I would expect MATIC to do the same. It's the same way I bought down here. I knew as we were building over here, we were able to kind of hop into the position down here, and then we got to move, take our profits as we were coming up towards this area here. So I'm going to do the same thing. We're going to build out a larger structure from this low pivot, hopefully a higher low, and then that higher low should lead towards about $1 again, back towards the buy side liquidity up here. Okay, so we want to chase after liquidity, always chase after stop losses, and that's the way we do it. So look for this structure to change. Okay, we've been in a downtrend, right? Been breaking down, and now we want to see a change coming to make a higher low, get our N, and then continuation. So that's what we're doing over and over and over, and we're going to keep doing that. And yeah, so crypto, I am looking for a bullish continuation on almost everything, but we are in the process right now in crypto of pretty much consolidation, and a lot of the consolidations happening on the weekly. So be prepared for a lot of trading where we're at. We're not going to be really moving on a lot of coins because the weekly time frames are what we're kind of going to be transitioning on, right? So we had a beautiful move on MATIC on the weekly, and now we've made our weekly high pivot. Now it's time to make a weekly higher low pivot, and that's going to take some time. It's the weekly. So a lot of charts are very similar to MATIC, so expect this to be a while. Bitcoin's the same thing. The weekly is going to have to take time to develop. It's going to be a while here. I think we have a good chunk of August where we're at, but once we get towards the latter half of August, if we're going to stay bullish, we should start to see a low weekly pivot, a higher low being made, and then continuation going up into September. Okay. All right, everyone, that is it. That is it for this overview. If you have any questions, make sure to leave a comment down below on the video. And if you're not here live and you're watching the recap, no worries. I do this almost every weekend, so you can catch me then. And I always try and leave a recorded video just in case you missed it. And of course, if you have any questions, the easiest way to get in contact with me is the Discord. And if you're interested in any of the services, check out the links below and all that good stuff. All right, guys, thanks again. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.